What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at this morning's London session on EURUSD, where I didn't manage to bag any trades in the macros. However, just at the close of the session there was a perfect SMT divergence with engulfing candle, so it's our exact entry pattern that we were looking for, yielding a really nice 3.4R long position. This could potentially be the low of the day. I'm going to go through the analysis now and explain why I was looking for a long position in this area and the exact execution that I took in real time. So before we jump into the analysis, please do go ahead, give the video a like. I've realised I've not dropped that many videos this past couple of weeks due to personal circumstances and I'm not being able to get on the charts in time. However, this was a perfect execution. So please go ahead, give the video a like, consider subscribing if you want to see more analysis like this one, and let's jump into the analysis now. Here we are on the daily chart on the euro, just to get a gauge of where we think our potential bias would be. So we are currently on Friday. So Fridays is generally a pullback day. So you may have heard of the TGIF trade, the Thank God It's Friday trade by ICT, which says that we can potentially pull back kind of 20-30% into the weekly range on a Friday. So yesterday we had a big bearish day. We swept some highs. We've respected a bearish fair value gap. The price is displacing lower. We do have relative equal lows all here as a potential draw on liquidity. This would mean really we would be bearish, expecting this liquidity to get taken. You can see we are dropping back in and retesting a very large bullish fair value gap. However, what I noted on the Dixie is that coming into the London session, we had actually swept the high. So we had a bullish bias on the Dixie, which means that we will be bearish on the euro. The two are inversely correlated. However, coming into London, we were sweeping this swing high where we had failed to take the high on the euro. If we compare the two side by side, we've essentially got SMT at this point. So this is an inverted Dixie chart. So when we've got the Dixie chart inverted, it means essentially the two charts should be a mirror image of each other. And we can see here the Dixie has taken this liquidity. So we've already swept the swing low on the Dixie. We failed to take the low on the euro. So this actually means that I could expect, or I could justify, a reversal here on the Dixie. Again, it's a Friday. In the weekly range, we expect a pullback on Fridays, and we have swept a significant level of liquidity. Now, if the Dixie were to reverse at this point, then the euro may reverse without taking this liquidity. So that was my thesis going into the session. We drop onto the 15-minute chart. On the 15-minute chart, we can see obviously we had very bearish price action from yesterday. So price has just been dropping aggressively on the euro, and then coming into the Asia session, swept the New York PM session high and then began displacing lower. Small pullback prior to London, and then again a continuation lower. There was no pullback into the Asia range for me to look for a continuation here. So ideally I would have wanted a pullback into the bottom of the New York PM session, so up into a discount, and then I would have been looking to trade this lower. However, we didn't get that. What we did get was the Dixie sweeping this liquidity at 3:15, so just after the first macro. I didn't trade macro 1 because I wasn't able to get to the charts. However, I did come to the charts at macro 2. Macro 2, I was looking for long trades on the euro because the Dixie had swept this liquidity. So because Dixie had taken that daily low, euro had failed to take the daily low, so we had daily SMT, bullish SMT on the euro. I was looking for a long trade inside the second London macro, and you can see we just displaced very aggressively lower in the macro. There was no way to take a long trade at this point. I hung around on the charts because the session doesn't close while 9 AM. What we saw at 9 AM is our perfect entry pattern. So we had the euro putting in a low and then failing to take that low, whereas the Dixie took the low, sweeping liquidity. So this is bullish SMT for the euro. We had our bearish fair value gap. This was traded over with a large displacement higher. And so we had one large engulfing candle. This candle is bigger than the candles around it. You can see we had smaller bearish candles coming down. We also had a good displacement prior to this happening. I was already leaning on the fact that this may be a reversal. We had a larger displacement candle on the Dixie, closing over this fair value gap. Volume imbalance area. And obviously we closed significantly over this. So my entry was on the close of this candle. We had SMT. We showed total disrespect of bearish fair value gaps. So we'd flip that into a potential inversion fair value gap. We had SMT. We'd already swept a significant level of liquidity on the Dixie. It's a Friday, so I am expecting a pullback into the weekly range. Therefore, as this candle closed, I took my trade on that candle closure. Stop loss was below this low, so I didn't expect us to take out this low. We generated relative equal highs here after the macro. So we pumped up, created liquidity, so engineered liquidity, failed to take the low, SMT, engineered liquidity on the Dixie as well. So we had a comfortable target to get to break even. We can see price aggressively smashes through that level and then continues higher to the 3R trade. I closed out 2R as part of my trading plan. I only close out low-hanging fruit 2R trades. They do potentially run a lot longer than that, but it's nice just to bag the trades very quickly. This was literally a couple of minutes. I bagged my 2R. You see price is now pulling back slowly. This could potentially be the low of the day now. And we could get a bigger pullback into the New York range. So there is potential to be holding runners here instead of closing out fully, expecting this to be the low of the day and New York to reverse and give us our TGIF trade back into the weekly range. I did catch this live. So I recorded this execution live. So we'll jump to that quick analysis now just so you can see the execution in live time. It was a bit of a surprise, this large wick. We did have orange folder news, which is what drove us through the take profit. So you see that in live time now. And that's the thesis behind the execution. It's just outside the macro where we didn't get a trade. We have now created SMT, Dixie, closed over an inversion fair value gap here. What we were able to do, generate relatively equal highs here to draw on liquidity. Gives us just over 1R to get to break even. 1, 2, so we've got engulfing candle closes over the inversion fair value gap with SMT. We've got relative equal highs here on the Dixie as well. Dixie has taken the previous week's low, so there is potential for the Dixie to reverse here. However, Euro has not taken that liquidity yet. The liquidity that we're looking for is a little bit lower down on the Euro, but as the Dixie's already taken it, we're expecting a pullback into the weekly rate. Oh, there you go. That is the move. Go break even on there, and then what's that? 2.5R, just instant. Now there was news, 9 AM, no, not 9 AM. Euro, German IFO pending, so there is some kind of Euro there. It's not red folder, it's orange folder news. That was the setup. In out, instant 2R. Just outside the macro, we're still in session window, so the session's just closing now, to be fair, so the entry was just inside the trading window. That was the expectation. The fact that the Dixie had taken the weekly low, or previous week's low, whatever it was, it had taken a daily swing low here. Dixie's already taken a daily swing low, meaning it could go for a reversal. The euro has failed to take that, so we've got SMT on a daily. Obviously it's Friday, so we expect a pullback into the weekly range on a Friday. And so I was bullish at this point, expecting the Dixie to start pulling price back up, and that played out perfectly. Really nice, really quick trade. Didn't get anything in either of the two macros because price was just dropping and dropping and dropping. Just outside the macro, we did get what we were looking for: clear SMT, clear engulfment candles. And we had generated, so the key that gave me confidence is we generated relative equal highs on both the Dixie and the euro. So because we had generated this liquidity and then we had SMT, I was confident that we would sweep this at least so I could get to break even. Obviously the orange folder did the job, got us to our 2R straight away, but that was the trade just outside the macro. A really quick trade, hope that was helpful. If it was, please leave a thumbs up, comments down below. Apologies that there's not been a lot of content recently. Obviously very, very slow trading due to family commitments and the time shift that we've had with New York. As April comes back in again, times are going to align properly, which means I will be able to get the charts for the macros in the London session without having to worry about getting the kids to school and things. But trading a little bit later today than normal, but the setup's still valid. SMT, engulfing candles, and having a reason to be looking for the long trade. So we'd swept significant liquidity, so there was a reason to be looking to go long. So yeah, please like, subscribe, leave comments. Thanks again. I'll see you in the next video.